Okay, hello everybody. I did some work off camera. We're doing our practice test. We didn't have class today, so I'm going to be brief, but I'm going to go over the practice test so you guys have this as a resource. Today is Tuesday, April 25th. And here we are calculating the overhead cost for each product using the activity-based costing approach. Okay, so what's different about the activity-based costing approach as opposed to like a plant-wide predetermined overhead rate is under a plant-wide predetermined overhead rate, we would do all of our overhead divided by like a certain amount of hours or something, and then allocate it based on that. But for an activity-based costing system, we are going to individually assign the overhead based on each of these criterias. Okay, so once we find out the cost per setup, per hours, per order, we're then going to multiply that back in. Okay, so that's pretty complicated, but I'll make it clear in a bit. So we'll do 25,680. We will do 80,070. And then last one we will do is 114,240. Okay, and then we have our total. So this was our total cost, right? Now we have our total activity, right? So we'll do 240. We'll do 1,570. And then we'll do 7,140. Okay. Now we can divide the two, right? So again, these are in dollars, it's total cost. And then we'll divide the two. So we'll get a cost per activity. So for one activity, could be the setup, could be the orders, could be the hours. Okay. So we'll do setups first. We'll divide those two. Then we'll drag this down. So all we did there, divided total cost by the total activity for the respective setup, hours, and orders. We've got a cost per activity. All right, now we're going to multiply by the drivers for each. So in product F, we had 104 setups. We had 510 orders. And we had 2,930 hours. All right. Now for G, we had 136 setups. We had 1060 orders, and we had 7,140. Nope. We had 4,2. I did the total. We had 4,210. Okay. So now that we have our cost per activity and the drivers, we can do this. We can do equals. We'll do the cost per activity times the amount of hours for F. All right. And then we'll do the same for G. So we'll do the cost per activity times the amount of setups. So these are both times the respective amount of setups for each. And then we'll do the same here. And this was for orders. So we'll do $51 per order times the amount of orders for F. And then we'll do the same for G. So we'll do 51 times the driver for G, which is 10,060 orders. And then we'll do this times this, which is the hours. And then again, we'll do the same for G. So we'll do this again times this. Okay. Now we can total them up. So we'll do equals sum, cool, drag that over. Okay, those are our two sums. That's our total overhead assigned to each product. Okay, this is under activity-based costing. ABC costing, cool. And I'll highlight that. So again, all you're trying to find, cost per activity. Okay, so cost per the total activity, and then multiply it back in to get the cost. Okay, and now it's asking the overhead cost per unit, right? So we are now going to divide our total cost by the number of units, right? So for product F, we're going to divide by 1,750 units and 191,950 respectively. Okay, so then we'll do this divided by this and this divided by that. Okay, so this is the MOH per unit. Okay, so again, that was the total overhead divided by the number of units. Okay, so for product F, 48.01 and 69.73 for product G. Okay, pretty simple. So just set this up, divide, multiply, use scratch paper. You won't have Excel in the test, so use scratch paper and you can just do the same thing I did, except you have to, do the math. Okay, we'll move on. All right. Data concerning these three activity pools been provided below. Okay, the activity rate for meeting with clients activity pool is closest to. Okay, so again, we'll do the same thing here. We'll do the, it's 1,205,892. Okay, and that's in dollars. So that's the total cost. And then we'll divide that by the total amount of meeting hours, because the activity driver for meeting with clients is meeting hours, right? Or the activity based. So we'll do 7,353. All right, and then we can just divide the two. 164 per meeting hour, right? So per means one. So for one meeting hour, that's how much we're gonna assign. Okay. Yeah. All right. Corporation uses activity-based costing. 3 activity pools. Allocations appear below. Okay. What is the overhead cost assigned to product W1 under activity-based costing? Okay, so what we're gonna do is okay, so this is gonna be the 91,000 for equipment and 12,300 for the supervisory expense. Okay, so we'll put those in dollars, right? And then we can multiply that by so we'll multiply that by our cost pools. So machining, order filling, and other. Okay, so we'll do 0.6 times 91,000 for the machining, because it's 0.6 here, and then we'll do 0.3 times 91,000, get that, and then for other, we'll equals 0.1 times 91,000. Okay, and then we'll do the same for here. So we'll do equals 0.6 times that equals 0.2 times that. And then this is also 0.2 as well. So other equals 0.2 times that. Okay, so I'm gonna put a box here just to make sure we're still golden. Okay. All right, so now that we have our activity cost pools, right, we can add up our costs, right? So this will be the total cost pool. All right, so then all we'll do is we'll add that plus that. We'll add machining plus other, and we'll add them all together. All right, so these are our 3 cost pools. Yeah, so I like swimming. Like swimming in a cost pool, how it be. All right. Cool. All right, in the second stage, machine costs are assigned to product using machine hours. and order filling products are assigned using the number of orders. Okay, so this is important, right? So we found our total costs for machining based on the cost pools, and we found our total cost for order filling. Now it's saying here we're going to divide by the machine hours and the number of orders respectively, right? So we have our totals. Now we're going to do total cost pool drivers. Okay. So we'll do the 27,850 and 1,197. Okay, and then if we divide the two, we get our cost per activity. We'll do this divided by this. Cool. All right, now we can multiply by the number of activities, right? So it's looking for the overhead cost assigned to product W1. So let's go to W1. Okay, and for product W1 had 60 machine hours, 6,500 machine hours, or 6,050 machine hours, and 198 orders. Right. So all we have to do okay, all you have to do is multiply this by this, multiply that by that, and then if you sum them, that is the total overhead assigned, right, to W1 under activity-based costs. So 18,414. Mm, 198. I do not like when the numbers do not match, but that seems close enough. That's how you would do it. So let's see, divide that. Okay, that's close enough. The other is not assigned, right? So not assigned to products. So 1414. Okay, yeah, that's I don't know. So that's how you would do it. Probably made a mistake when all through there, but there you go. That's how you do it. Okay. Collections following schedule: 45% month of sale, 48% following sale, 7% second month following. Sales have been budgeted. Budgeted cash collections in June would be okay. So here's what we're going to do. So in June, we know we collect 45%, right? So we'll do 140,000. Gotta do this over here. That's in dollars. And we will do that times 0.45 because that's 0.45 in the month of the sale. And we'll get 63,000. We're also collecting 48% of our May sales, right? So 100,000. All right, and then the last one, April. So we're picking 7% second month following sales. So April, May, June, second month. So we'll do 120,000 times 0.07. we'll hit equals and multiply those. Great. Put that in dollars. And now we can total them. So equals okay, and that's our total cash collections, 119,400. All right. Calculate the estimated sales this quarter as a whole. Okay, so good thing we have our budgeted unit sales here, right? Good, good. Now we need to find out the selling price. So we'll do times 15. So $15 per unit times 11,000 units. I'm going to do this on my calculator. I'm not going to do it on Excel because it's not going to be worth it. So we'll do 111 or 11,600 times $15. We'll get estimated sales of 174. Second quarter, 1260 times 15. We'll do 14,600 times 15. And then the fourth quarter will be 13,600 times 15. And then for the year, we'll just add them all up. We'll get 786. Okay, so all we did there, budget unit sales times price per unit. All right, total cash collections. Management expects to collect 65% of the sales in the quarter, which the sales are made, 30% the following quarter, and 5% uncollectible. Being balanced, all of which expected the first quarter is 71,400. Okay, so what we're gonna do is we're gonna do the price we got here, or the total sales here, times 65%. So I should have actually done this in Excel, but 174. That's in dollars. Yep. Times 65% in the first month of the sale. And equals, multiply them. Okay, and then we'll also add in the 71,400, right? Because that's the other amount of accounts receivable. That plus that, 184,500. Okay, and then in the second quarter, again, we will collect 65% of the sales in the second quarter, but we'll also collect the 30% of the first quarter, right? So we'll do 0.3, and we'll do that. We'll do 0.3 times the first quarter sales. And that would be our accounts receivable at the end of the first quarter. And then we'll add that to the second quarter sales, which we got here. So 189,000. And then that's again times 0.65. So it equals 189,000 times 0.65. And then we will sum those up. Make that dollars. So it's 175,500 or 50. Okay, and that's how you would do it for the rest of these. I'm not going to do them all just because that would take a little while. I'm a little short on time here. So now for the required production of units. Okay, so the company starts the first quarter with 174 or 1,740 units of finished goods inventory and equals 15% of the next quarter's budgeted sales. The desired ending finished goods inventory for the fourth quarter is 1,940 units. Okay, so kind of similar to what we were doing here, except we're doing the required production. Okay, so we just need to take the number of units in production times 15%, minus, no. Okay, so it's the 111,000, it's 11,600 plus 15% of this, right? So we'll do 12,600 times 0.15. Okay, so 1,890 plus the first quarter's production, so 11,600. Okay, so 13,490. Okay, we'll do the second quarter and then we'll be good. So the second quarter, we need to meet this much in required production. So we'll do 12,600 less the beginning inventory for the quarter, which is this minus this, so 13,490 and 11,600. So less beginning FG, and then add okay, so what we did here is this is the amount of units we need to make to sell in order to have 100% of the budgeted sales be sold. We're going to subtract out the beginning because we don't need to make those units, but then we also need to add in 15% of this number of the third quarter, right? So we'll do 14,600 times 15%. And then we'll do equals, we'll do this number minus beginning plus the desired ending, 12,900. Okay. And then you would do the same for the third quarter and the fourth quarter. And then for the year, you would just add them all up again. Cool. We'll move on. All right. The total cost of should be purchased in August. Okay, so we need to purchase enough in order to cover August plus 20% of September. So we'll do the August of 23,000 plus the 20% of September, which is 21,700. Yep. Okay, and then we can then subtract out this because it's our this is on hand. So this is needed, and then less the 11,200, so less the beginning. Okay, and that's okay. So we did this minus this to get that, and then we can multiply by our standard cost, right, for $22 per kilogram. That's in dollars. So then we'll do that times that. Jesus. All right. And then we will go. I see what we did. Okay. So this is tricky. I was looking at units and this was in kilograms. So make sure that your numbers match and they're all in kilograms here. So what all we'll do here, no harm, no foul, we'll just convert this into materials, right? So, we'll hit the materials. So 6.6 per, or 6.5 per. Okay, and then we'll do this times 6.5 less our beginning materials again, right? So, and we'll get this, but equals this minus this, and then we will multiply by $22. That's much better. There we go. Okay, so again, make sure you're converting into kilograms of raw material. You only need enough for August and September, and 20% of September, but less the beginning balance. So that's how much you need to purchase. Okay, less beginning. All right. Okay, cool. All right, little short on time, but basically I can kind of read this. So you're gonna do your total, right? So you're gonna do 3,900 times 7 plus 43,230 minus 3,530. And it's not that we're not paying depreciation here, but it's asking for the cash disbursements, right? So actually we'll just do this. So we'll do 3,900, and then at $7, we'll get equals this times this in dollars. And then we will add in our 43,230. Again, that's in dollars as well. So this is our total overhead. So if we're going to put that on a balance sheet, that would be our total overhead. But we need to subtract out less. So total overhead less depreciation gets you your cash disbursements, right? So the depreciation was 3,530, and that's in dollars. So we'll do this minus this, 67,000. Okay, that's the cash. Cool. Desired cash balance company should borrow. Okay, so you're just going to borrow whatever you need to in order to get to the desired cash balance. So you'll basically just do beginning. In this case, we spent $500 more than we got. So we'll do beginning minus 500, and then so that'd be 19,000, and we need to get up to 13,500. So we will do the difference between them. So we'll do 31,500 minus the cash on hand of 19,000. And we will borrow the difference. We will borrow $12,500 to get to that desired cash balance. Cool. Okay. All right. I'll do this because you guys have been having trouble with this. So flexible budget, planning budget, very, very fun, right? So all of these, it's just simple like multiplying. Okay, so this might be Excel work if you were in the accountant field, but you guys have to learn how to do this or just understand what's going on inside the Excel program here. So we're gonna do the meals, right? And it looks like we only have one cost driver in terms of for these. It's just the number of meals, but you might have multiple. So make sure you're looking at if it's per meal or per like machine hour or whatever. So whenever it says per meal, multiply by the number of meals. So for the groceries, we would do 4.55 times 3,500. And we'd put that there. And then for the planning, we would do the meals 3,300 times 4.55. And then activity variance is the difference between the flexible budget and the planning budget. And the way you can remember that is activity, right? Means hours or how active you are at producing meals. And so your activity variance will always have a difference in meals or in activity. Whereas a spending variance is going to have a variance in cost. So if you were looking at the spending variance between the flexible budget and the actual expenses, you would take whatever you get for the flexible budget after multiplying by all of these and get the difference between these numbers, and that would be your spending variance. So this one is all expenses, right? So it's pretty easy to figure out if it's favorable or not. I'm gonna go out on a limb here, right? Because I see, and I'm super efficient at this, but I see a lot of per meal, which tells me that the flexible budget is going to have more expenses than the planning budget because we've got to pay for those extra 200 sandwiches to be made. So we can tell that it's going to be an unfavorable difference as opposed to our planning budget for basically all of them, probably. The only exception would be our fixed expenses, and that would be none. So the fundraising, and then that's about it. So just the fundraising, right? So I'm not going to do it, but we would know that we're going to have an unfavorable budget because our flexible budget is going to be higher than what we actually planned for. So you might be asking yourself, so why would we ever make 3,500 meals if it's unfavorable as opposed to making 3,300? Well, we're forgetting one thing, and this doesn't really show it, but we're forgetting the revenue, right? So our revenue, if we sell 3,500 sandwiches, is going to be more than if we sell 3,300. So that would be a favorable variance, right? So your revenue goes up, but so does the costs of that revenue. Okay, so just something to think about. And then again, the activity variance is the difference between the two. So if you don't understand how to do that, just do the bigger number minus the smaller number. Do not put a negative number here. And then don't total your variances to get your total variance expense. Just compare it to these two. Always compare it just across. Okay, that's all I'm going to say about that one. Okay. Okay, so we're going to do the total costs. So we'll do 10,000 visits and then times each driver. So we have a driver of 540 for supplies. We have 840 per laundry, expensive laundry. So maybe you want to audit that a little bit, but okay. Now we have the wages, right? So we'll do 53,400 and we'll do 86,100. Okay. And now we'll just do this times or we'll do the 540 times the new activity rate and the 840 times the new activity rate. So as opposed to 9,000 whatever, it's 10,000 now. And again, we'll make these in dollars and then we'll just total them up. So that'll be our total MOH. Cool. Pretty easy. Okay. All right, so for this one's a little hard because it's just a word problem, but once you figure it out, not that difficult. All right, so we're seeing activity variance, right? So immediately that tells us that we're looking at the difference in volume of amount of frames. So let's do this. Let's do 861 frames and 856 frames. And then we don't have to worry about the actual supplies cost because we're just doing the activity variance. But it's $6 a frame. So we'll do 6 here and 6 here. That's in dollars, right? So then we'll multiply this times this and this times this. Okay, so that's the variable portion, right? Then we need to add the fixed. So it's 2,300 a month for both. We'll make this in dollars. Okay, and then I'll label it just so it's easier to track, but they planned for 861 frames, and the actual level of activity was 856 frames. So we'll do actual. So this will be our flex, right? Because the flex budget is the actual amount of hours times the cost sheet. And then this will be our planning. Okay. So we planned the 856 hours, actually the 861. Okay. So this is concerning supplies cost, right? So it's going to be an unfavorable difference, and I'll show you why. So unfavorable difference. Okay, it's an unfavorable difference because we planned to spend $7,436 on supplies, but due to the activity increase, we actually spent $7,466. So that is a $30 difference, and that's unfavorable. Because no one likes to spend more money than they have to. All right, this will be like the last thing I'm going to do because this one's the important part. And I brought my notes out, just so make sure I get it right. But we'll do this. So we'll do the materials price variance first. So we'll do our actual quantity times our actual price. So let's see. We're going to do the 7,400 times 0.3. And that's $21,120. And then now we'll do the standard multiplied by the standard price, which is the 33 cents. So 0.33. So this is the actual price, and this is the standard price. So immediately we know that it's going to be a favorable difference, right? Without off the gate, because our prices, are lower, right? We're paying 33 cents less per micron, but we'll still do this. So according to our standard cost sheet, the cost of 70,400 would actually be that it'd be that. And then to get the variance, you're just gonna do the biggest minus the smallest, and you'll get 2,111 or 112. Okay. And that's a favorable difference because we're paying less than we should have. Okay, now for the quantity variance, we're going to do the difference in materials that we made versus how much we should have made. So according to our standard cost sheet, it's supposed to take us 7 microns per toy, and we made 5,400 toys. So we'll do 7 times 5,040 or 5,400. And then now we're going to do the now we're going to do, okay, so now we need to find out how many materials we used, right? So we'll do 7,400 or 74,000 minus 26,750. Okay, so that's the amount used. And then we'll divide that by the amount produced to get the actual amount. So before, the 7 is the theoretical amount. This is what actually per toy. So we used 8.75 per toy. Okay, and we know that's an unfavorable difference. And you ask yourself, why? Because would you rather use 7 microns per toy or 8.5 microns per toy? You'd rather use 7 because each micron is going to cost you like that 30 cents or so. So yeah. All right. So the way that you would calculate the, oh my. All right. The way you would calculate the materials quantity variance, you could do both costs, both total costs, and then subtract them. Actually, no, you couldn't. Forget that. You'll just do the 875. So equals 875 minus this. There you go. All right. So we got 1.75 additional microns per toy, right? And if we made 5,400, we get this many additional microns used. We'll do more microns used than we should. Okay. So then once we have the amount of microns, then we'll just multiply again. We'll multiply that by our standard cost per micron, which is the 33 cents. So we'll do this times the 33 cents. We will get 3,118.5. Okay, that's about all the time I have. The labor rate variance and the labor efficiency variance are very, very similar. You'll just do for the efficiency, you'll do the difference in hours that you were supposed to work versus actually worked, and then multiplied by the standard labor rate of that. And then for the rate variance, it'll just be it'll be this divided by this, and then you'll get a number, and then you'll subtract out 750 to get the variance. And then multiply by 5,000 and 1.2. But yeah, okay. So that's all I have today. I have office hours from 3:30 to 6:30. So if you need to see me, please come see me. Oh, remember to like, comment, and subscribe, and I'll see you guys in the next video.